Hey everyone, John Henry here from School of Trade. Today we're going to be taking a look at a short trade here on the S&P. Beautiful wedge breakout pullback and finding a bunch of resistance off of the newsletter level that we talked about last night. That's coming off of the monthly area of resistance up here at 2167. And after we fell off that area, we've been pushing down into a nice wedge. And that wedge is forming in a breakout. We broke underneath it, and now we're pulling back to retest the bottom edge and a huge amount of bearish resistance there. And that's exactly what we want to see. So I'm short at 2162. My stop is at 63.75. My first target, taking two contracts off at a 1-to-1, that is equal to our stop. And then the final one, if we zoom out a little bit here, the final objective is really just back to the pullback that we had at the end of the day yesterday. We slammed higher, pulled back, and fired off back up to the highs, and that's likely going to be the next area of support. And given that yesterday was such a strong trend day, the best that we're probably going to be able to do on the downside is mostly just a range, kind of ping back and forth on the highs and lows. And a lot of times the market's just searching for an obvious area to find support and resistance. And what more obvious than the last pullback of the day yesterday? So that's kind of what I'm looking for the final run down to the downside at 59.25 to finish the move off. Everything lining up really nicely. Now we just have to see the sellers push in and drive the market down into our targets. Seeing the bears pushing down, big pop through the lows there, and that got the target filled. Now that big move down through the lows, it's likely just due to the fact that there are a lot of stops there, right? We know that the buyers probably have been trying to buy this entire move down. We have the obvious swing low back here. That area has been acting as support. Buyers tried buying into this move up. They just got stopped out. Now the fact that they got stopped out and the bears still maintain this heavy bear candle here shows us that the sellers do still have emphasis on the downside. So our objective at 59.25, it does still make a lot of sense to the downside here for the sellers. So just waiting for the sellers to see if they can push back in one more time, get the drive down, finish the move off. We have reduced the risk all the way down to 62.5, so it's only a 2-tick stop now after taking off that first target at 1-to-1. I'm leaving it back a little bit just because this is obviously a very slow morning and we're riding back and forth without a whole lot of movement, right? Look at the candles themselves. All of these moves are very small. So we need to give the market a little bit of room before we try to choke the trade out, and that is exactly what we're doing. So a 2-tick stop on the trade, looking for 59.25 next. Sellers continuing to push down at another big drop right through the lows there. Beautiful move down. This is kind of standing out comparatively to the rest of the day. This is some of the biggest bearishness we've seen all morning. Big pop through the low, followed up with another big pop through the low, and they happen very quickly. It's definitely indicative of stop runs, and it makes sense. These locations are very obvious places to find a lot of stops, and, well, unfortunately for them, they helped us get our trade taken off. So that's going to do it for me. Beautiful move down in the S&P breakout pullback of the wedge. If you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com. And as always, we'll catch you next time.